Expectations were already low for this index, but we've seen it missing those expectations and dipping down. How dire would you say the situation is?
Good morning, Matt. I do think the situation is becoming increasingly dire. We see that the weakness, which was focused on manufacturing, is now spreading to other sectors. Within manufacturing, we see the weakness broadening. It started a year ago with the automobile industry, but we now see it's across the board. It includes the chemical industry, electrical engineering companies, machinery. So it's really broad, and it's now also affecting the services sector, which is becoming weaker. These are services close to industry, like logistics in particular, but also other sectors. So there is a general decline in the assessment of the business situation, but also in confidence regarding the coming months.
How would you gauge the reaction of Berlin, and what would you expect the country to be prepared to do, possibly to spend, to get Germany out of this crisis?
The focus of Berlin is still entirely on distribution policies. In Berlin, the Social Democrats are today discussing the introduction of a wealth tax or tax increases in this situation. So I think Berlin has to wake up yet to this new situation. For instance, there are tax cuts planned for 2021, an income tax cut that could be brought forward to 2020, and Berlin also needs to do something about corporate tax. It's really time to focus on this current situation. No reason to panic, certainly, but this should be taken seriously, and currently it isn't.
What is the likelihood, Clemens, that a spending package would help? One of the things we hear from politicians in Berlin quite often is that all of the headwinds, all of the risks to this economy are coming from outside, for example, from the trade war or from Brexit, and that a stimulus package wouldn't really do any good.
Well, I would say that is true to some extent, but there are also internal difficulties. It is true that spending, for instance, on infrastructure, public investment, is not the solution at the moment. We do need more public investment, but the construction industry is still running at full capacity, so there is little to do there. That's why I say what the government can do in the short term is not so much spend more, but cut taxes and let consumers spend more, cut taxes for companies, and improve investment incentives. These are things that have an effect in the short term. It is generally true, if China or the US buys less Mercedes, it's difficult for the government to step in and say, we buy the Mercedes in Germany because we don't need them. But what the government can do is improve business conditions, improving conditions for investment by offering an attractive tax environment, by offering stable conditions and reliable conditions for in the energy sector, for instance. So the government can, and I believe should, do things to stabilize the development, in particular in manufacturing, which is so important for Germany.